Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets. The week ending Friday, November 7th, 2025, we're here to provide a comprehensive analysis on market performance. Kicking things off, I'm Max Profit. In the major stock indexes, all key indexes closed down for the week. The S&P 500 index ended at 6,728.81, down by 111.38, marking a 1.6% decrease. A very strong positive trend persists across all indexes despite this dip. Analyzing the market breadth, the S&P 500 index had 306 decliners versus 190 advancers this week. The Russell 2000 index followed suit with 1,105 decliners compared to 804 advancers. Despite the overall positive trends, this week's breadth shows a clear lean towards more decliners. Focusing on the total and daily returns, the Nasdaq Composite Index closed the week with a total decline of 3%, showcasing a strong positive trend year-to-date with a 19.13% return. Conversely, the S&P 400 Mid-Cap Index experienced only a slight decline, ending the week almost flat. Examining annual returns, the Nasdaq Composite Index led with a remarkable 295.84% in 3-year ARR. The S&P 500 Index follows closely for the decade, with a steady ARR of 12.35%. These figures highlight the enduring strength of the tech-heavy indexes over longer periods.
Checking out best and worst performing equities, I'm Penny Stock. MMTec soared by a staggering 290.9% weekly, closing at 2.58. This strong positive trend hit a new all-time low earlier, only to rebound strongly. Meanwhile, Resolute Holdings management closed at a remarkable 174.8, boasting a new high with a 136.3% gain. For total and average daily returns, MMTec and Resolute Holdings management show impressive gains. MMTec's one-week return shines at 290.91%, while Resolute holds steady, benefiting from a one-week return of 136.3%. Both stocks are riding strong trends. The annual returns highlight Terns Pharmaceuticals with an amazing 161.61% one-year return. Evoke Pharma also impressed with an 89.2% gain. Meanwhile, MMTec's 3-year trajectory is down, revealing a mixed long-term picture despite recent uptrends. Among big-cap stocks, Datadog is on a roll. It surged 17.4% to a one-year high, marking 3 consecutive weeks of growth. Expedia also made headlines, hitting an all-time high at 258.25 with a robust upward trend. Henry Schein displays significant volatility while climbing 13.7%. Return metrics spotlight Expedia's stellar performance with a one-week return of 17.39% and an impressive 38.6% year-to-date gain. Datadog mirrors this pattern, demonstrating sustained positivity with returns pointing to a strong growth trajectory. Annual returns reveal Expedia's strength, with a 48.31% one-year return and a 42.27% 3-year return. Datadog also shows significant long-term increases. However, Canvue reflects a mixed trend as recent gains struggle against longer-term losses. Now turning to the downside, Mint Incorporation led declines, plunging 81.3% to 0.86, marking 3 weeks of losses. Energys Group Limited followed, with a steep 79.9% drop, reversing its recent highs. Shineko faces a very strong negative trend, down 74% in volatile conditions. Hefty weekly losses affect these stocks. Mint Incorporation shows a one-week negative return at 81.39%, echoed by Energys Group Limited's 79.95% downturn. These totals highlight sharp declines, further accentuating their downward trajectories. In the worst-performing U.S. stocks, Mint Incorporation closed at 86 cents, plummeting by 3.76, marking a staggering 81.3% decline. It recorded a new all-time lower close, continuing a strong negative trend with robust downward volatility over 3 consecutive weeks of losses. Covering worst-performing U.S. big-cap stocks, Super Micro Computer closed at 39.76, shedding 12.20, with a 23.4% drop. A negative trend coupled with strong downward volatility was evident. CarMax recorded a new all-time lower close at 32.36, decreasing by 9.55, with a 22.7% decline and a very strong negative trend. In the next round of big-cap underperformers, DoorDash ends the week at 204.31, down by 50.6, showing a 19.6% slide with a consistent negative trend. Axon Enterprise suffers a drop, closing at 602.51, losing 129.72, and experiencing a strong negative trend with very strong downward volatility. Rounding out the worst-performing big caps, Zoetis concluded the week at 120.24 after a 23.85 drop, marking a 16.5% decline and a new one-year lower close. It continues on a very strong negative trend as market conditions remain challenging.
And now on to U.S. sector performance. The energy sector closed at 684.73, gaining 9.98, driven by a strong positive trend. The healthcare sector also showed strength, closing at 1,701.65 with a rise of 21.63. Contrarily, the real estate sector and consumer defensive sector see strong negative trends despite closing gains of 2.55 and 6.72, respectively. Lastly, the financial services sector experienced a mixed positive trend with an upward breakout after a sideways movement. In a mixed performance day, the energy sector moved closer to positive ground, with declines slightly outpacing advances in various timeframes. The healthcare sector, despite an uptrend, saw more declines over advances, notably contributed to its one-day count of 662 declines. Meanwhile, real estate showed similar decliners, with a generally weak and negative trend. Consumer defensive experienced even more significant decliner bias. The financial services sector shows mixed trends, but exhibits a myriad of advancing stocks, particularly over a week. Turning to returns, the energy sector maintained a weekly total return of 1.479%. The healthcare sector follows with a weekly total return of 1.287%. Despite its upward close, real estate has the smallest return yet, maintains a very strong negative trend. Notably, the financial services sector has low daily returns while showing a mixed positive trend. Focusing on longer-term returns, the energy sector reports a 10-year annual rate of return of 2.9037%. Impressively, healthcare reports a strong decade-long rise, with a 7.4517% annual return. The financial services sector leads with a 10.1761% annual return. Despite weak annual movements, real estate and consumer defensive maintain positive long-term returns.
In U.S. energy stocks, Coterra Energy led with a strong closing price of $26.57, up 2.91, marking a 12.2% increase, closing higher for 4 consecutive weeks. Targa Resources followed closely, up 18.2 to 172.6, with a positive trend ongoing for 3 weeks. Expand Energy showed upward volatility, climbing to 112.45. Notable gains over the past week for U.S. energy stocks include Coterra Energy, with a one-week total return of 12.3%. Meanwhile, Targa Resources delivered an impressive 11.7% one-week return. Expand Energy contributed robust returns of 8.8% within the same period. Despite gains, Targa's year-to-date performance remains slightly negative at -3.6%. Over the decade, Targa Resources boasts a significant ARR of 13.52%. EQT also exhibits strength with an ARR of 9.47% over 3 years. However, APA shows ongoing struggle in the long term, with a negative 6.7% ARR over 10 years.
The technology sector closed at 5,707.66, falling by 252.46 points, or 4.2%. Despite this decline, the sector maintains a very strong positive trend. In contrast, the communication services sector closed down at 422.50, a 1.7% decrease, maintaining a mixed positive trend. In market breadth, the technology sector saw a significant bias toward declines, with 473 stocks declining over the week compared to 153 advancing. Similarly, communication services had 152 declines against 59 advances, showing a negative one-week breadth. Evaluating total returns, the technology sector recorded a one-week downturn of 4.24%, similarly for the month, yet it showed a year-to-date return of 23.82%. In contrast, the communication services sector also dipped 1.7% weekly, but managed a similar year-to-date boost of 23.66%. Over a longer horizon, technology sector posted a notable 165.49% total return over 3 years, translating to an impressive ARR of 38.43%. Communication services achieved a 172.32% gain in the same period, reflecting a strong annual growth rate of 39.6%.
In the past week, U.S. technology stocks saw significant declines. Super Micro Computer plummeted 23.4%, closing at 39.76, with strong downward volatility. Arista Networks and the Trade Desk also faced downtrends, with the latter recording a new one-year lower close at 43. This week's total returns for U.S. technology stocks were overwhelmingly negative. Super Micro Computer reported a negative 23.48% weekly return. The Trade Desk continued a negative trend, achieving a new one-year low. Meanwhile, Block closed down for the second week, echoing overall declines. Long-term returns echoed short-term losses for declining tech stocks. Super Micro Computer reported a 10-year annual return of 29.13%, contrasting its recent drop. The Trade Desk, however, faced a significant 67.55% loss over the past year, struggling with a very strong negative trend.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.